Right now, Devang, hi, afternoon. Has the time come to buy? And if so, would the tilt be towards large caps? What's your recommendation?
Good afternoon, Aisha. Thanks for having me on the show. I think, yes, clearly, these are times when I know, though normally these are trying times when people feel that everything is gone. But the sense is that there was some bit of gravity and there surely will be bounces around. And most importantly, I think all the possible negatives seem to be priced in, and all the positives, right from the good budget to the rate cut to the Delhi election results to liquidity being pumped by RBI, plus the result season being decent. I think all these positives are sort of not priced in. So my sense is that at this point, when the valuations are probably getting a bit inexpensive, valuations are getting sort of quite, I think I can say reasonable, as well as price points are reasonable. I think here is the time that probably you should be ready with your list. You should revisit the portfolios that are already constructed. And there are great opportunities, I think, lying across the market cap spectrum. I'll not say only large caps, because there has been a severe correction across mid caps and small caps. And I think if you just paint the same picture as a overall market cap bias, it will be difficult. But I think there are a lot of deserving companies across in the mid cap and small cap arena where a lot of profit pools are also shifting. So my sense, don't keep a bias on the market cap, don't keep a bias on the sector, but great businesses which you wanted to buy have corrected by 10, 20, 30, 40, 50%. Just probably good time to start off accumulating them.
Let's say lots of deserving companies. If you could share a few names with us and our viewers, what's looking good, or at least the sectors which are looking good right now that merit a fresh relook after the correction that we've seen in the markets recently.
Yeah, I think clearly there are a lot of sectors which a lot of people would have missed out on. A lot of themes, if I can talk about that. So the entire theme which was related to power automation, semiconductor. A lot of people also talked about missing out on defense as well. There are companies which are proxy play towards capital goods ancillaries, engineering type of companies, manufacturing companies. Even if you look at the severe correction that has been experienced on the discretionary consumption side, be it hotel businesses, be it retail, organized retail businesses, be it even QSR. I think most of these companies have gone through a decent amount of correction on the valuation as well as on the price point front. I think the sentiment itself was so negative that even good numbers by most of these companies and decent commentaries have also got sort of punished, because it was more of profit preservation that was done. So I think these are certain sectors, these are certain micro themes which one should look at while constructing a portfolio. Yes, overall your banks, financial services, and that also could be looked at. But I think the major money would be still made in a lot of capex related businesses and consumption related businesses.
Okay, so capex and consumption, Kunal brings me to a name, and I'm talking about Varun Beverages. That stock has hit its 52-week low once again after its earnings. Do you believe now would be a good time to start accumulating more of this now that it's at a 52-week low level?
Yeah, it could be a good time where I think many of these oversold mid cap names, they would actually start to find their feet back again. But then what we need to see as a distinction is that whether you want to participate this as just a pure trading play where you're looking at a bounce into these stocks, or whether there is a material change in terms of the price trends for these stocks. That's, I think, something which we need to see, because right now these stocks are into an oversold territory. The indicator conditions, the price conditions are much severe into these stocks. But then eventually what happens is that these stocks are the ones which again fall lower after a period of bounce. So I would probably look out for an initial part as more of a trading play. I think at 475, at the longer term averages is closer to 600 plus for Varun Beverages. You might probably expect the stock to come back towards say 500, 525, kind of a trading pop of 8-10%. But then I think at those levels of 500, 525 is where one needs to assess that if the stock has not seen a major volume jump up, then this could just be about more of a short covering rally.
Okay, getting a little off highs though. It's definitely technology sectorally which is weighing heavy on the markets. But look at a DRL, for instance, as well. That's also cracked about almost 3%. There's Cipla, Sun Pharma. So pharma and IT, you would have to say, are buckling under pressure. So the consumption names like Britannia, where there's chatter that that's going to be the one moving out of the index, that's also down about almost 1%. Maruti, Nestle are some of the other names which are also looking weak right now. From within the larger cap, or rather within the mid-cap universe, the broader universe that is, there's Oro Pharma, Zydus Life, Bata and LTIM, which are taking the knock. Cracks of anywhere between about 3.25% on LTIM to Bata down about almost 2.6% in the futures. Devang, what about the consumption space? Anything that's looking interesting there where then you think perhaps negativity is in the price? And I'm talking pure staples here right now.
I think most importantly, we need to just recognize that most of the consumption names are still tad expensive than what they were. I think if you look at the volume growth of these companies, a lot of these companies, they are 1%, 2%, 3, 4, 5% type of volume growth companies, and they were trading at maybe say 70, 80, 85 sort of price to earning ratios. And that PE derating has happened over the last 2, 3 years. But the sense one gets is that you need to have companies. I just hearing about Varun Beverages now. This which has shown remarkable growth across categories, right? Across categories on the revenue front, on the profitability front, on the expansion front. I think such companies should be looked at. Yes, these companies are again looking at a 52-week low prices. So I think this is the fear factor that is riding high on the market, which is making people push and sell this type of businesses. So yes, selectively one can probably look at staples, but as I said, more money would go into discretionary type of consumption, which I just talked about, the likes of the hotels, aviation, QSRs, in fact, retail, the type of jewelry companies, some jewelry companies, I'm not talking about all companies, but most of this are where patterns are changing, where consumption patterns, where spending patterns are changing. And I think one needs to just recognize that rather than even staples, one can probably go into this type of businesses.
If you like this video, then like, share and subscribe to ET Now.